I recall our last conversation. It was pretty much at the lows, like right around like early 16K mark, which is pretty nice catching up, man. Uh, it's like, damn, I didn't really expect this to move so quickly, you know, because you know me, man, I don't really like pay attention much to like equity markets. Like I look at tech, right? I look at tech, but I don't really look at like industrials or bonds or anything like that. Because I like to think of like Bitcoin and crypto as sort of like a global market, not really just tied to U.S. equities. Um, but yeah, like when we look back on it, like we were discussing in our first conversation back in December, you had so much like you had so much shit happen in the market that it's like, Bitcoin just refused to give out. It refused to give that nasty capitulation that many, many, many people were expecting. And, I like to attribute it as, it's a mature asset now. It's over 10 years old. And it's sort of like, like a hyper commodity. And when you look at the gold chart, correct me if I'm wrong, but gold is only like 1% away from hitting an all-time high, right around like 1%, 2%. Um, so I don't know if there's anything that I'm missing, but what would you attribute this sort of like huge price action to like what do you think the cause of this nasty price action is? Because it's not really derivatives driven. It's sort of like, you had 15,000 added to the price. So you look at other cycles, right? We went from 3,000 to 13,000. So in terms of market cap, like we basically almost did 50% more as far as like market cap added onto Bitcoin compared to 2019. So it's like, I just think the asset class is getting older. So would love to know your thoughts about that. But before we go on, man, I want to know how you are, man. It's good to see you, man. Uh, the
Yeah,
tank himself.
no,
Yeah, great to have you up, Joe.
thanks. No, it's awesome, and I hope everyone's getting ready to enjoy a beautiful Friday night if you're in the States. And no, it's absolutely exciting, right? And let's go back. Let's get some historical context here, right? So we had an overwhelmingly bullish cycle across all asset classes for most of the latter half of 2020 into 2021. Liquidity was abundant. We had strong economic growth, fostered mostly by the stimmy checks that were pumped readily into the market, and obviously folks that had a huge amount of cash they built up from deferred expenditures through most of the pandemic. And that drove all asset classes to the moon. I was looking at like even obscure asset classes, things like, you know, Rolex watches and comic books and various trading cards. And what you saw across everything is that everything mooned in 2021. And even non like, financial assets, like if you were out there trying to get people to do work on your house, or try to get access to various commodities like lumber, everybody shared that chart. Things just absolutely ripped, right? There was finite supply because the economy was shut down. Suddenly everybody realized the world wasn't ending, and they bid everything across the board. So where did that come, how did that end? Right, it ended with basically, obviously we had some structural inflation that was being built up because of underproduction of various commodities and assets. And I think naturally it was, in hindsight it seemed obvious, but at the time it wasn't as clear that the Fed was going to have to eventually pump the brakes on things. Now, pumping the brakes in itself hurt financial assets, it hurt Bitcoin, but it also hurt stocks. It massively crushed the bond market. If you were looking for the 2022 capitulation, it was absolutely in the bond market. It was for the 60-40 portfolio, 60% stocks, 40% bonds, which is the benchmark portfolio that many people measure against, it was an absolute collapse of that portfolio. One of the worst years in recorded history, because when the Fed raised interest rates, they decreased the value of all those fixed income instruments that people were holding. So Bitcoin, got caught up in that. Structurally, there's no reason Bitcoin had to have that nasty bear market. In fact, I would wager that Bitcoin would have done increasingly well, would have had an incredible cycle and would have a much longer cycle had we not got caught up in the headwinds of the macroeconomic environment. Now, the key thing I think that people need to talk about and just be honest about here is with Bitcoin is that, Bitcoin trades, unfortunately, like a risk on asset. And last year, if anybody was following me, I was beating the drum for most of the year that I didn't think we were close to a recession. The economic data didn't say we were going close to a recession. Obviously, a recession is different from a pullback in assets. And Bitcoin, when stocks are declining 20%, Bitcoin's going to decline much more than that, just because of it being a very young, immature asset. It's not going to always be that way, but that's what the price you pay. As Bill Miller says, volatility is the price you pay for outsized returns. So it's going to correct more to the downside, and it's also, spring back much faster than the equity market has. And I think you've seen part of that this year. So, what's changed in Q3 and Q4? You saw global liquidity reach a trough and then begin to be introduced back into the system, mostly from sources outside of the United States, but also commercial banking system. Commercial banking system tended to cut off some. There was some I won't say cut off, but they decreased the amount of liquidity they were supplying to the system in the middle to latter part of the year, and then it sort of made a rapid comeback up until the Silicon Valley Bank, which we'll get into and talk about. But obviously, when liquidity becomes more abundant in asset classes like the bond market and stock market stabilize, Bitcoin's going to catch a bid, and you're going to get rid of the tourists that were scared out of the market, that joined mostly in the near the highs in 2021. They didn't realize what this is and doesn't realize this is very typical and normal for it. But the key takeaway is I view Bitcoin as, I'm incredibly bullish on Bitcoin. Let me just state that as at the outset. But one of the reasons I'm bullish on Bitcoin is because I don't believe that asset prices across the board can truly collapse with the way our systems are designed. And I've said this, for years. I think that they're not going to let there be a retirement crisis where the entire bond market and the stock market collapses 80%, like some of these people are out there saying. And as long as they are determined that there is still a Fed put at some point, maybe it's lower than where it used to be several years ago. As long as that's the case, you should be hyper bullish on Bitcoin. But you should also be bullish on other asset classes. It's just the difference is Bitcoin is structurally designed, because of its finite supply, to outrun every other horse in the race. So anyway, that's just my view. We can chat more specifics, but overall, I think look at the. I'll just wrap up saying, look what we learned today. And there's a great tweet, I'll put it in the nest, from Bob Elliott. We learned that this week that growth remains above trend, unemployment is secularly tight, wage growth is relatively stable, not showing you anything considering a hyperinflation, that the bank crisis concerns are relatively fading, and that inflation remains a concern of the Fed. But now you've got open governors of the Federal Reserve saying that we're near a pause, we're near the end of our hiking cycle. Every single metric we got this week on a short-term basis, short-term being the key thing, is bullish. Right, so I expect things to continue to perform relatively well. Latter part of this year is a different story. We'll see if we get the recession everyone's been predicting for the last 2 years, but we'll get into that a little bit more.
Payne, if you want to chime in as far as the macro stuff, feel free, because I know you have experience working with offices and all things like that. But really, the only thing I have to say as far as like treasuries and all that is concerned is I find it kind of odd how we always bottom out in traditional markets with big headline prints. So if you guys remember back in October, and I hate to bring this up because I'm a crypto specific guy, but when you had Janet Yellen, saying that she was worried about, quote unquote adequate liquidity in treasuries, that's essentially when we had bottomed out. And then, you had stocks like Meta go below $100, retracing 8 years of gains. That was an
Yeah, that's
anomaly.
like my only equity exposure
And
is Meta and Coin. because I
Guys,
mean,
and we had actual like forex crises. You had the sterling, you had the Australian dollar, and many other things as well. And it's like, if you take that into account, as well as what happened during the summertime when gas was like $8 a gallon, $9 a gallon, people couldn't go to work because of that. They had to like DoorDash and bicycles. It really begs the thought, like wouldn't you say that the worst could be behind us? I understand second half when they cut rates and all that stuff. We usually limit down across all markets, and even in crypto when that occurred, we retraced from like 9K back to 6K, and then inevitably had that black swan down to 3,800. But Payne, if you want to add on to what Joe had said, feel free to do so, man. I know your experience in that field.
yeah, I more so wanted to just like pick Joe's brain. I'm curious as to like what you're thinking as far as like short term bullish. Like, what's your time frame for that?
Yeah, next 30 days minimum, probably longer. Here's the reality. Can we go back to something you said, which I really want to emphasize and harp on, because I think it's absolutely critical. If you go back and look at what the SEC and Yellen and various Fed chiefs have said repeatedly about the Treasury market liquidity, that does not mean the same thing as demand. Okay, people are conflating the two things. The SEC, as of last September, proposed a series of amendments to try to improve liquidity in the Treasury market, and liquidity in large respects is diminished for one simple reason. You lack a central clearinghouse for treasuries. That is the critical thing you have to focus on. You have all of these primary dealers, and they all have to hedge in moments of high volatility to protect their books. And there's no central clearinghouse, which means that you have these wide variations between bid-ask spreads. It's really kind of intricate plumbing of the financial system. But what the SEC is talking about, and what the Yellen has been talking about with respect to liquidity in the treasury market, don't confuse that for lack of demand for treasuries. In fact, there are some metrics recently that have been published, particularly the tick data, that shows overwhelming demand. I mean, look at the recent issues with the 4-week bill. I mean, you're seeing massive bid for these instruments, particularly at the higher rates. And if anything, we're short. There's collateral shortage globally by virtue of the fact that the Treasury is constrained by not being able to issue short-term instruments because of the debt ceiling. So liquidity is different from the actual demand, structural demand for treasuries. We can get into that discussion. It's a longer discussion. But to your point, you're like let's just try to boil this down to the simplest aspects of what I think most people are focused on, which is asset prices. Okay, what do asset prices do in the event you have a recession? And the reality is, okay, everybody's scarred by 2008, where asset prices took it on the chin because you had a banking system collapse. But there have been historical recessions in history, mostly in not in the recent memory, but pre 1980s, where stocks did relatively well in recessions. In fact, the best I put a tweet about this previously. The best time to buy stocks was really in the heart of the recession. Okay, so if you get a recession this year, that does not mean doomsday. It does not mean collapse to the system. It does not mean that you have to have sort of a 2008 type financial crisis. You could, it certainly could, but the question is like, what are the telltale signs that are out there right now that are telling you this is going to be more than just a run of the mill recession? There are some. You can definitely point to them, but I would say right now, if you're being honest, the the weight of the evidence tells you that the recession that we're actually likely to have at some point this year, which is my base case, is likely to be a garden variety, not anything close to a 2008 type crisis.
So would this be like, I believe we had a recession like in the early 90s, and
Yeah,
also,
1990s recession. Absolutely.
yeah,
Yeah.
yes, something like that. Um, do you think, Joe? And this is something that, it is possible, but I'm not in that camp. I know Dave Hunter has his thesis of the melt up and all those things, and we'll actually be hosting him on my show next month. But essentially, like, I'm assuming what he's saying is, if you remember, the Nasdaq like tripled in the late 90s within 2 quarters or something like that. So I mean, if we were to apply that to Bitcoin, I mean, you're talking about BTC almost going to 100K. And I wanted to know, like, in what circumstances would you even see that happen? Because, Bitcoin likes to surprise people. It really does. And
Yeah. Well, let me just say this. I'm familiar with David Hunter. I don't want to say anything negative about him, but I will say I find it frustrating because he does not show his work and how he comes up with these calculations. It seems more just sort of, sentiment based stuff, and I don't really buy into that very much. But let me just tell you this: if the Nasdaq is doing what these melt up people are saying, if it's tripling or doubling, Bitcoin's going to be at like $500,000. Okay, I'm not saying that's going to happen. That's not my personal prediction. So don't say Joe's calling for $500,000 Bitcoin. I mean, I think we eventually get there, but not anytime soon. But my point is, like, the amount of liquidity that would have to come into the Nasdaq to drive that kind of a move, you'd have a far more outsized move than Bitcoin. And we've seen this historically, because Bitcoin has structural market issues that make it, like I said, be the fastest horse in the race. And I continue to believe that to be the case. I'm skeptical of these sort of pie in the sky, like, extreme moves in markets. Now, you can have very strong price action on Bitcoin, and I happen to think, like I said, for the short to intermediate term, that will continue. But I think that let's steel man the other side. If you were bearish on risk assets, okay, there's one thing you need to look at. There's a single thing you need to focus on that will disrupt what I think is a structural bid built in, and it's passive indexation driven by workers. What we have seen is that as unemployment tends to rise and rise rapidly, I'm not talking about rising to 4.5%. If it needs to get closer to double digits, that will completely disrupt passive flows into the indices. And if you remove the passive flows, which are $6 out of every 10 in a monthly basis that goes into the equity market, you can have a cascade of selling on the stock market. You could really, we could go lower very fast. So the question is, okay, if you're focusing on this and just trying to handicap it, has something changed structurally with the labor market that's going to force unemployment relatively low because of boomers retiring and because of a lack of workers in certain fields, and that's going to keep unemployment relatively tight. That's going to keep workers in relatively strong bargaining power. And yeah, you could have isolated pockets where there is disruption and a quote unquote isolated recession and things like commercial real estate. But by and large, you're not going to have a mass layoffs where you've got 20, 30 million people unemployed across the country. I mean, to be honest, like, that's not something I see. I don't see there being some huge. I mean, I deal with a lot of businesses and all sizes, small, medium, large. They continue to complain about lack of workers and struggling to find qualified applicants.
Joe, what do you think it'll have to take for like people to really start, like the average consumer really feeling it? Like, what do you think is some of the things that needs to break? Because we already saw the banks have like the liquidity crisis by being like overexposed to long duration bonds and stuff. So at this point, I think the bull case lies on the fact that like so many, terrible things have happened in the last like 8 months. And this is like more so towards crypto than equities, but I mean the SVB thing applied to equities too. And I think that so many bad things have happened that I think there is a case to be made that there was like a big capitulation in tech, especially last December. And so I think that what are some of the things that you think really have to like, you know, happen within the economy to drive equities like substantially lower besides, like unemployment or interest rates?
Yeah. So I mentioned one, which was unemployment. I think that one of the things that can be very problematic for millions of Americans is this issue with the student loan. I mean, if student loans truly resume like they're supposed to, and depending on what the Supreme Court rules on this forgiveness, I think you can expect consumers that have grown accustomed to not making student loan payments. I think there's some research by the MBER and other firms that um, you're going to have cascaded defaults, which will hurt credits and cascade through. So that's a huge thing. Like the fact that student loans continue to be deferred and have not had to be, people have gone years now without having to make that payment. That's all stimulus flooding back into the economy. By the way, cost of living increases by CPI. Every single retiree has gotten a historic cost of living increase because of inflation. So that's more stimulus being pumped into the system. All of these things, again, make it easier for consumers in this environment. So, like when you look at consumers, and that's the heart of your question, what are they going to care about? Number one, they care about having a job because they need to have a job. Number two, they care about wage bargaining power. And if you have secularly tight unemployment, which I think we have for the foreseeable future, that increases their bargaining power and their ability to demand higher wages. And number three, I think that the key thing is access to credit. Everybody shows this chart about credit cards, okay? And there's Brookings research on this, by the way, I can pin in the nest. But they show this chart about how credit card demand, consumers are maxing out their credit cards. That's a bullish indication, not a bearish one. It means that consumers still continue to have access to credit. Yes, at very high interest rates, and there is an end to that. But if you're trying to time that, you need to really see defaults skyrocket. You need to see people not maxing out their credit cards or drawing on more credits. You need to see them being denied access to credit and being unable to actually get more credit. Okay, because that allows people to keep kicking the can down the road. And as long as credit is in ready supply, you don't have that sort of day of reckoning. And it may come, right? I'm not saying 6 months from now it could be you can't see a cascade of defaults across the board. But right now, credit card delinquency rates, like 90 days, they're below 2019 levels. Okay, that's not sounding the alarm like imminent collapse is here, like some of the FinTwit bears are talking. Literally, go pull up the chart. It's on Fred. Don't take my word for it. You see delinquency rates, 90 days plus on credit cards are below the levels they were in 2019.
So Joe, this would basically entail what Drunken Miller says, yeah? Like the rest of the 2020s would be more like sideways, and then, tech would outperform in emerging markets and stuff like that. When we're seeing like the French stock market make all-time highs, we're seeing the DAX close to making all-time highs, India making all-time highs. And I know India's kind of been like, a topic like, they might be the next Dubai and things like that. And, we have China that's already reopened, and they're really embracing all things Bitcoin and crypto. So are you in that camp where, America just might be in a range for a number of years, kind of like, the late 70s, but, still upheld because, people can lose their corporate job, but, still make 25, $30 an hour on the gig economy. And the gig economy like has shown no real signs of like slowing down at all. It's like almost everybody does DoorDash, Uber Eats, Instacart, works for Amazon, and things of that nature.
Yeah. So as a general rule, I am hesitant and sort of, it's kind of not my habit and practice to make these sort of long-term, like 10-year predictions, because you've got geopolitical instability, you've got all sorts of issues that could crop up in 2 or 3 years and change the game, right? I think commercial real estate, for just to give you one example, the commercial real estate has completely changed since COVID. People, the regardless of you're debating, whether that was right or wrong. People's habits have, I think, permanently changed in the wake of COVID. And I don't know a single macro strategist that was able to forecast that we were going to have that global pandemic and the rise of remote working in the way we have. So I don't really think it's very helpful. And to be honest, I don't think it's I actually think it's counterproductive, not just not helpful to have these long-term theses, because what it does is it gets you entrenched into saying, well, this is what I expect to happen, and you sort of blind yourself to new data as it comes about. What I look at is like 12 to 24 months, and I think predictions that are longer than 12 to 24 months are kind of a fool's errand. And you don't need to make predictions more than 12 to 24 months to be very successful as an entrepreneur or as an investor. I mean, ultimately, right now, what can I tell you? I can tell you that I think there are signs here in place, at least in the near term defined as next few years, that there's likely to be continued structurally higher inflation. Now, that does not mean hyperinflation. It can be, a CPI running, above 3%. for the foreseeable future. And I think there's issues in the labor market that will prevent unemployment from rising rapidly, like we have had in serious other recessions. But like asset wise, I'm fairly confident that Bitcoin will continue to perform well for the remainder of probably the decade, if not longer. And I'm fairly confident that right now, okay, the country is weakening in terms of its economic growth, but on a relative basis globally, we are miles ahead of many other sovereigns. And that's key, right? If you're an investor and you have the choice to allocate capital, where are you going to allocate it towards? Are you going to allocate it towards, you know, emerging markets? I mean, there is huge red flags in some of the emerging markets. Where are you going to allocate to China with the instability that's occurring right now? I mean, I continue to see that the United States stands apart from many other places right now, and that's important from a capital allocation standpoint.
Joe, I kind of feel like we're getting to a point now where Bitcoin, excuse me, where Bitcoin is sort of seen like sort of a passive savings bank, right? It's convenient. You can do cool things with it. I remember back in December, I was shooting the idea with yourself, Magoo, and also Dr. Jeff Ross. Individuals that have been here before, and I was shooting the idea, man. Like maybe the younger generations like myself and Payne, we can, do things like NFTs and, some DeFi on the Omni chain layer. And, those sort of developments are coming out now. So, I tend to think that, this safe haven coming to fruition, and we saw that with Silicon Valley Bank. I think it's honestly going to be very bullish. And, at this point, as you recall from our initial space back in December, my base case for end of year for Bitcoin was anywhere from 28 to 32K. And that's what I like to do. I don't really like to do any short-term stuff. That's for like, the hyper quant traders and stuff like that. And anything can happen in between, right? Like black swans can happen, huge pumps can happen. And oh, I see we have Dow Chemist here. I'll bring him back up. But Joe, do you have any interest, man? I know this is kind of like a conversation that's never thrown in your way, but would you be interested in things like Bitcoin ordinals, like those NFTs and things like that?
That's actually a good question. I'm
Yeah,
curious as
yeah,
to.
yeah, yeah, yeah. Because I know I know like perhaps like do you ever have like extended family members be like hey Uncle Joe, do you like NFTs and things of that nature? So I've never really like proposed this question to you because I know usually the conversations that you have on these spaces are really like strict macro and clean cut professional all that stuff, but I want to entertain some some fun here. So would love to know. Have you ever thought about any of these things?
Yeah, no, absolutely. I've thought about them for years, and I've long believed that in the end, everything will gravitate towards one chain and multiple layers on top of it. That's been my belief since at least 2016, as I can recall. And there's reasons for that, right? Concerns about the chain, concerns about computing power, all these sorts of things. Like they're going to be devoted to the strongest chain, and people. There's no purpose for all these other things unless they have the same type of level of security. And I personally, I don't think the world can have multiple proof of work chains. I think the proof of stake system is inherently flawed. So by definition, you'll have that gravitate towards Bitcoin. And I think Bitcoin, contrary to what people believe, is built to adapt over time. And by adaptation, I don't mean changes in the base layer, although that can happen. I mean, like it's adapting in terms of its use case. And with respect to ordinals and all these other experiments, I think they're fantastic. I think lightning is fantastic, and I think our lizard brains can barely comprehend the various different applications that we can and will eventually use Bitcoin for. Just to give you one example, I thought it was cool, and when I've had nieces and nephews born, every single one of them I have bought Bitcoin for them, and I have inscribed the date of their birth on the date of their birth, and good wishes from Uncle Joe. on every single niece and nephew I have. It's on the blockchain.
That's badass, man.
Yeah, no, and I loved it. I
It's a
mean,
great idea.
yeah, it's fun stuff like that, right? It's not earth shattering, but I continue to think the power of an immutable ledger that is truly decentralized, that we truly have confidence in, that can withstand even a state sponsored attack, that has so much value. And the fact is, like, the biggest surprise for me about Bitcoin is that I honestly, the biggest surprise is that we're sitting here in 2023, and I feel like a tiny sliver of the world still understands how monumentous this thing is.
I'm curious, Joe, like, do you think that, like people need to spend their Bitcoin in like all these different places, like, just to use it for everyday items on the internet? Do you think that is essential for Bitcoin's adoption? Or do you think that that doesn't necessarily need to happen? Because I think that some of the philosophy behind, a lot of BTC holders like contradicts itself in the sense of you can't really have hyper big Bitcoinization if everyone wants to just like only hodl and if it is really truly this asset, and I believe it is like it's I love BTC. I'm just saying I don't know why would I be inclined to spend it over USD at like for my groceries or something online. And so I'm curious is like if that's something because personally I don't think that that's necessarily a great use case for it. I think it's just, it does one thing incredibly well, and that's to store wealth in the ways you said. It's, no one can seize it. It's decentralized, truly, and it can survive a state-sponsored attack. I think that's very important. But I'm curious, like, do you think that that needs to happen for BTC to really take off and like become this asset that everyone uses all the time or everyone owns?
Yeah. So great question as always. And my answer to it is that I think we're in a stage right now where we are still a little bit removed from where Bitcoin eventually becomes a daily medium of exchange. And there's a couple of reasons why. And I don't think and I will start off with saying I think it's unfair for the critics that complain about it not being used as a daily medium of exchange, aside from the fact that, it has the store value aspect and has very stellar performance over the long run in terms of returns. The biggest reason why I think it will struggle, at least in the short run, is because of our tax policy. It is fundamentally unfair to criticize people for not using Bitcoin to buy a cup of coffee in the United States, and all these, traditional finance people say, "Well, it's not used for X, Y, Z. I can't buy X, Y, Z with it." I think that's an unfair comparison when I to buy that $5 cup of coffee, I have to incur capital gains. So you have a legal barrier in place, which I don't believe will always be there. I think the legal barrier in place will eventually be removed once you onboard enough people to it, and it becomes their store of value, their unit of account for savings purposes, and they in turn will have the political weight to demand changes in the tax policy where it would be advantageous to use it. That is a critical element. I think now, obviously, there are some emerging markets where I think it does make sense to use Bitcoin or in some of the channels for mediums of exchange. I don't think U.S. is one of those. It's relatively we have very much privilege and benefits to have very fast payments and payment providers in the United States. So I don't think that's a first world sort of priority. First world priority is getting millions of people on board to Bitcoin, to understand it, to custody it, to improve custody solutions. But we'll get there to the daily medium of exchange. It's a process, right? We're as my friend Brad Mills talks about, all he says, like, Bitcoin is bootstrapping itself from nothing to something, and that is not going to happen overnight. It's probably not going to happen in even a decade or two. It could take multiple decades to get to where it needs to go, but we are going to be there. And then the final thing I think is really critical is that you still need advances in layer two, layer three solutions elsewise to be able to handle the significant volume of the transactions we have globally. I mean, I'm a big believer in Lightning. I think that's one of the ways we get there eventually. However, right now, under its current manifestation, Lightning globally could not handle the transaction volume we need it to handle to eventually be able to replace something like the Visa system. It's going to take a lot more innovation. I think we can get there, but these things take time, and you're building something in an open source way, which also presents problems. You're building it without a lead, like a team that's devoting full time Most of the people that are doing it in Bitcoin are doing it because they truly believe in the project. So you don't have some of those incentives. So I think it's just one of those things where we have to set realistic expectations about where Bitcoin is now on its journey. And that is not to say that it can't get to the point where it is being used as a daily medium of exchange.
So I wanted to pass it over to Dow Chemist. I know he's over in Latin America. So now, being in that part of the world, I understand. There are some places, like Venezuela and also Chile, where you have everyday merchants accepting cryptocurrency. So for yourself, do you find that Bitcoin has made your life a lot more easier, given the rapid depreciation from other fiat currencies? And before that, I also saw Jason Williams going parabolic. I read some of your material, Bitcoin Hard Money. You can't F with. Huge fan of your work, sir. So I invited you up to speak. If you want to feel free to join this conversation, feel free to do so, brother. I sent you an invite to speak. So with that being said, Dow Chemist, man, good to have you up here again. Floor is all yours, brother. Great to have you in this
How's it
discussion.
going, Dow?
Hey guys, what we having this conversation like 2 hours ago? You guys are like nonstop covering the crypto space, so I respect that, man. All the effort and the hustle. Congrats on that. I think you guys know I'm not really a big BTC guy, right? So take everything I say with a pinch of salt or two, right? But yeah, living in Colombia, I've definitely had conversation with people locally. There's a lot of Venezuelan actually that work in Colombia. So the conversation I've had is yes, like back in the days, like maybe 2, 3 years ago, there was a strong adoption of Dash, that really strong Dash community. You go to stores and see that you could pay in Dash, maybe even more than 3 years ago, like 3, 4 years ago, right? It was around that time where there was kind of similar as like the early days of Bitcoin, right? When people were going store to store, convincing the merchant to accept, crypto. You had that in Latin America, at least in Venezuela and Colombia. I'd say now the conversation is more around an escape to inflation, to your point, Wabi. But this is where like you have to take everything I say with a grain of salt. Like the conversation I've heard so far, the feedback I've heard is they're not really that interested in investing in Bitcoin or even Ethereum or volatile asset. They're looking at things like Tether or USDC as a hedge, right? And of course we know that this is not a perfect hedge because of inflation, right? But to them it's all relative. So if you look at the Colombian pesos relative to the dollar, it has massively inflated. Same thing with the Venezuelan peso. So to a lot of locals, they're not necessarily looking per se to invest. They're just looking for a way outside of a pesos that reducing their purchasing power, and they see it in real time, right? Like the price of food, the price of gas, the price of everything goes up. So a lot of people have some awareness of crypto, but I would say it's more towards the stable coin. And so from that point of view, I think what CZ is doing with Binance, providing prepaid credit cards, they're connected to people's Binance account. You just need an address. You don't even need to have a bank account. That could be a massive play for adoption. And I'm not a big fan either of BSC. I don't think it's decentralized at all. But I think since you understand that Latin America historically has more of a sensibility towards financial crisis. If you look at Argentina, even Brazil, they've had to deal with that in the 80s and the 70s. And so people are just more readily open to looking at crypto, looking at alternative, right? Like Argentina to this day, most people use the black market, use dollars. Venezuela now is actually dollarized. So that mental flexibility to look at other currencies and to live your life using another currency is way more mentally ready in Latin America, right? So I think this is one of those places where we're going to see a lot of adoption in the next 5 to 10 years. So, but I haven't really heard anybody really that interested in Bitcoin. Maybe rich people in Colombia, people that I know, yes, as an investment, right? But not necessarily for everyday use.
I see. I see. Awesome, man. Um, I see we have like one person. He's been requesting for a while. I know Joe's running on some limited time. Oh, never mind. This individual just left. But yeah, man. I know all about the Dash culture. I know like they were accepted in Burger King and things like that, and they're really only used for like a means of payment. I understand that in some parts of the world, they don't really see it as we do, right? And um, I consider myself lucky to be in the position where I am today, where I'm able to use this as a vehicle to achieve my dreams, which is ultimately to be at the world's strongest man. And this asset class has provided a means of freedom, and also it gives me a sense of self sovereignty. So it's good to hear that from you, Dal. And Payne, I know you were off mute. You wanted to say something. Go on ahead, brother.
Oh no, I was just gonna say that was great perspective, and I do think there's a very legitimate use case for, yeah, just like having exposure to the U.S. dollar. If you're not like if you're in a country that's prone to hyperinflation, I think that's a pretty understated use case. So I think that was also interesting. He said people were more interested in stable coins than BTC. Like it makes sense, but I also think that there's like some things about BTC that are obviously stronger than ETH and stuff. They're not susceptible to like any government intervention or anything along those lines. So yeah, I thought that was really interesting. But do you think I'll bring it over to Joe. Like, do you think we'll see more and more countries do what El Salvador did last cycle and kind of like pop up in Latin America and just say, hey, people can use Bitcoin for everyday transactions. Do you think we'll see that like as a trend through you know, countries like over in Latin America, or do you think that it'll take like a big country to do that before we see it sprinkle in through smaller ones?
And I also want to throw in one more
Guys,
thing.
just give me.
Also, the wallet problem that we have, like we still have to order our wallets online. Like we're still not capable of going into a Walmart or a Target and just buying a hardware wallet off of that. And there's so many like phishing links on the web, and I think that's another step to mass adoption. Like there have to be more suppliers that are willing to partner up with these large corporations to offer hardware wallets. I'd like to see us at a point where you can go to a gas station and get a hardware wallet. Wouldn't that be sick? Just wanted to throw that in there, guys. But go ahead, Joe. Excuse me for the interruption.
No, I was just gonna say I need a minute. I'll be right back.
Ah, okay, okay, okay. No
No
But
problem.
problem.
in the meantime, let me add like maybe some colors to what I was saying earlier, right? So that I'll paint a picture, and I was surprised as well. If you go on DeFi Llama, uh, the last couple of weeks they added a new feature, which shows you the amount of daily users on chains, right? And so I think if you were to guess, right, you'd say, oh, well, probably Ethereum is out there, right, in the top, not even close. Ethereum's got like 300,000 users. Then you think, well, Arbitrum's got to be out there as well, right? Well, nah, Arbitrum's got like 100,000 users, which are respectable numbers. But you think about, billions of people around the world, it's not even close, right? Now, where it gets interesting, right? And the first time I saw it, I thought it was a scam. I thought there was no way, must be bots. The number one chain, the most amount of activity is Tron. Justin Sin's Tron, with 2 to 3 million daily active users, right? So the first time I read those numbers, I said, that there's no way it doesn't make sense. It has to have an army of bots. What I did hear from people who are more familiar with Tron and the Southeast Asia market is it's the cheapest way to get access to USDT. So it seems like in Southeast Asia, there could be a similar play that we see in Latin America. People just wanting to get access to a hedge, right, against inflation. Maybe in Malaysia, some of the countries when they have to face inflation, right. And then the second chain is BSC, 1 million daily active users. So I'm not necessarily promoting those chains. Right? I don't care for Tron. I don't care for BSC, and I'm really definitely value decentralization. But in practice, I think there's a disconnect between the ideological points that we want to talk about and we push for and the actual adoption that's materializing in places where they don't have access to the same financial services that we can take for granted in the West, right? So I think it's an interesting learning, and when we talk about crypto adoption, right, like obviously most of us are probably speculators and investors. When you start to about people that actually use it for everyday transaction, for cross borders, and just to hedge against inflation, those points about decentralization, permissionlessness, I think a lot of times they get lost, right? It's just, hey, can I get access? Is it cheap? Is it in my wallet? Yes, then I'm good to go.
Yeah, I mean, I think that's a great point. I think that there is definitely a difference between like what's actually happening and you know the reality of our different ideologies that we want around using this stuff. So I think that lightning is a good step in that direction, though. I mean, oh, what's up, Joe? Did you raise your hand?
Yeah, so let's talk about the USDC. So whether it's USDC or some other construction, ultimately the way this will go is that sovereigns across the planet will be launching CBDCs. I think that United States will be probably the last to launch a CBDC, but there will be others that have active plans that are going to be in the not so distant future. And when you have those sovereigns launching CBDCs, they will invariably try to monopolize the market. They will try to undermine those folks that have already launched the so called stable coins, or as I like to call them, theoretically peg coins like USDC. And they will say, sorry, if you're engaging in this activity and you have banking license and you're pretending to be your own your own form of currency, we're not going to permit it. We're not going to let you have bank accounts, which that is the flaw with every single stablecoin out there. How it is constructed necessarily relies on someone, whether it's Tether or USDC, having dollars or cash equivalents in an underlying bank account backing whatever token is being issued on a blockchain. Right? And that's a flaw, and it will be something that's subject to monopolies by sovereigns saying, we don't want you to engage in this activity where you are mimicking a sovereign currency. So I'm not particularly bullish on long term these things. And to your point, who was it, Dow? Yes, in the short run, obviously there are people that globally would love to have access to the dollar. It is the asset. If you go and travel anywhere in the emerging markets, they love dollars. They're eager and happy to take dollars because of its relative stability globally. Number one, that might not always be the case, and number two, think about how that dynamic changes when you have the introduction of central bank digital currencies, which I believe are coming. So I'm not particularly excited about that long term. I'm far more excited for people waking up to the fact that, wait a second, what if we want some unit of account, some store of value that is completely divorced from a sovereign, that is not controllable by a sovereign, that it cannot be manipulated in any way by a sovereign? That is something that's particularly attractive to us. And again, it's a process. It's not going to happen overnight. People have to go through this journey, and it can take longer than people expect. But in the end, the logic is what should drive your decision making on the asset. And frankly, Tron and these other projects, they're all invariably flawed because of the fact that they are dependent on a particular individual or group of individuals that can be identified, that can be hauled into court, that can be subject to prosecution, and can be shut down. Bitcoin has no such person. So that is the core difference from everything else out there, and why I'm so bullish on Bitcoin.
Yeah, I hear that. Those are really good point. I would say, yeah, in the case of Tron, you can just take Justin Sun, and most likely most of the validators are known to him. And if you're a regulator, a U.S. regulator, you can go after Justin Sun and probably find a way to either shut down the chain or have him to do some reordering, right? In the case of BSC, I think there might be a bit more decentralization, but it's still most likely you'll be able to route up most of the validators, and if you just remove CZ from Binance, right? The CFTC actually doing the same way they did Arthur Hayes back in 2018, right? Like he was a king. People forget like Arthur Hayes was the main guy. BitMEX was the best platform to get your derivatives and to gamble on, and the CFTC went after him, and he was gone. Now he's writing some nice Twitter threads, but like he's never been the same, right? So there's a potential that the CFTC will do to CZ the same thing, and I think Binance without CZ, or maybe it can survive, but it's not going to be the same. The liquidity, market makers, all those guys going to leave and go to safer chains. I don't know about BSC, but I think to your point again, there's enough of a sense that people would be able to identify who those actors are. Well, we slightly disagrees. I think Ethereum is decentralized enough that you can go up to Vitalik, the Ethereum Foundation, and if a consensus, and the chain will still work. You wouldn't be able to do any reorg of the transaction. It would still be a blow, right? I'm sure the ETH price will go down by 30% or something like that, but the chain will be fine, right? It's decentralized enough. Is it as decentralized as Bitcoin? No, for sure, because it's just more complex, and we have things like Infura, and yes, most of our half of the validators use AWS, but it's decentralized enough that you really can't, as a regulator, go after the chain or ask, for example, that hey, if North Korea stole $100 million, can you like fix that? And no one can really do anything about it because they use a mixer and then it's gone and there's no way to go back. So I hear the ideological point, right? Bitcoin is the most decentralized, but unfortunately, even for me, like I would want to see more Bitcoin adoption, ETH adoption, or more decentralized adoption. But I wonder if it gets lost when it comes to like the everyday person who it's not that they don't know, it's just that they have other more pressing issues, which is it. I just want to edge right now.
Yeah, I mean, I think it goes back to what are you trying to accomplish? Okay. And I would maintain that there's no reason for Ethereum to exist because I think everything on Ethereum can either be done on Bitcoin, or if it cannot be done on Bitcoin, why would you want to even do it on Ethereum? Why wouldn't you want to just do it on AWS? So I don't really see a point for Ethereum's existence. Now, I agree with you largely. I don't think Ethereum's going to disappear in the near term, and I think it's got some institutional backing that is probably sufficient to get it to survive for the foreseeable future. However, okay, my biggest concern with it is that I think people will eventually wake up and realize I don't need this thing. This thing doesn't do anything, and Bitcoin can satisfy my needs for money. I'm still quite confused as to whether Ethereum even is pretending still to be money. I think they've sort of abandoned that narrative somewhat, and it's more of like, we do other things besides money, and we're this smart contract platform. But then I ask the question: is why does that need to be on a blockchain? Why does that need to be on any proof of stake chain when you can accomplish the same thing through other means?
Yeah, that's a good push back on it, right? I don't want to monopolize the mic, so I just finish on that. But I think usually the only real difference between BTC maxis and Eve, maxis, I guess, is actually 1%, right? Like I'd say most Eve maxis look at most of the space and say it's 99% bullshit, right? The difference is that BTC maxis think it's 100% bullshit. So the only difference is that 1% that when we look at things like Uniswap and Aave, we say, hey, those things are fundamentally decentralized, and we're able to do that using smart contract. And for now, you can't really do or express the same level of coding on Bitcoin or even on Lightning Network that you can do on Ethereum, right? So if I want to create like a DEX, it's a lot easier and more expressive to use something like Solidity, even though it's not a great language. But the thing is, that alone, the fact that we can create a marketplace that no one can stop you from using, that's really powerful. And in the case of Aave, you have a protocol that no one can stop you from creating a loan and from someone to be a lender, someone to be a borrower, and those are like the building blocks of finance, right? So you start adding a few of those building blocks, and to your point, most of the stuff that we see on Ethereum and all the cryptos is vaporware. It's here today, but it's going to be gone tomorrow. But in my humble opinion, I think it's fine. I think you look at the startup space, and 70% of those startups goes down after like 5 years. So we see a lot of innovation, a lot of scam, unfortunately, a lot of rugs, unfortunately. But out of that, what remains that 1%, in my opinion, has value because it can be a decentralized financial layer for tomorrow. I would love to see something similar on Bitcoin. I just think if you're a developer right now, you don't see the same infrastructure for you to get started, the tooling for you to get started, and yeah, it's just really hard, and it kind of goes back to Vitalik wanting to build on top of Bitcoin and being told no, and it's good to see that the ordinals are coming around, and we got Taproot, and I think there's even like some ZKs that are going to be built on top of Bitcoin. So I applaud this effort. It just I don't even know if the culture of Bitcoin at this point wants that. I think that's the question for Bitcoiners. Like, I'm not that involved in the community, but the leadership, do they actually want more utility, or they want to remain that core single use of being
Yeah,
store value?
that kind of goes back to my initial question where it was just like for mass adoption in general, because like I said, I think there's a contradiction in the philosophy of a lot of people who hold BTC in the sense of like you want to hold it, right, and you not want to spend it. It's this hedge against inflation. I mean, it is still that's not true. And it's like there's a plenty of reasons why people hold BTC, but there's not that many reasons to spend it per se. Besides, like, I mean, we've mentioned a handful, but I still don't think that like the majority of people, given the choice, would go and spend their BTC rather than USD. I don't know. I mean, I can't speak to that in practice, but what do you think, Joe? Like, do you think that a bunch of people would, if they said tomorrow everyone could, spend their BTC or use their BTC, a bunch of people would just start using it? Like, I just don't see it. I just don't see it happening necessarily as far as
I
the
think
people who
I think
currently hold
millions.
Bitcoin,
Yeah,
because most of them don't want to spend it. They're just like, I'm never selling. I'm holding forever. It's never, going to leave my cold wallet. So that mindset definitely does not make sense as far as relating to like having it be this big currency that everyone's using.
yeah. I mean, as I said earlier, I think that you'd have a groundswell of people wanting to use Bitcoin and only Bitcoin if you had advantageous tax treatment. I mean, the tax
Yeah,
treatment in the United States is a huge barrier to it being used natively for payments. And the key thing is like uh, going back for a second to what you said about like these things like the dexes. Okay, you have to think about what is the virtue of the dex itself. Like is that a positive thing to have the dex, which I would take issue with the fact that those are truly decentralized, and I know that the SEC and CFTC have looked at it and said no, they're really not. They're maintained by a core group of folks, and they have had summons issued on them, and they've had cases where they've removed tokens at the request of regulators. So I don't know how really decentralized it seems, just decentralized in name only. And I think there's a recent report by the U.S. Treasury that they basically found that all these dexes are really just decentralized in name only, that they don't really provide sufficient barriers from regulation like Bitcoin would. But put all that aside, I mean, the core of your question is like, what are you trying to accomplish? If you're trying to build a money, okay, your core responsibility at the base layer is to make sure that you know that the ledger is immutable and safeguarded from attack. That's more important than everything else. That core trust that people are putting their hard-earned time, their hard-earned wealth into, you have to know that that is reliable. If you don't satisfy that initial hurdle, if you don't get over that, the project fails. Okay, and then after you take care of that, then you have to get people to start to change their philosophy with respect to what they believe is the preferred currency to store value in. Okay, and that's again the process we're in right now. People switching that mindset where they thinking in Bitcoin terms as opposed to thinking in fiat terms, which I think the vast majority of people who even own Bitcoin, they still assess Bitcoin on a daily basis as to what the USD value of it is, as opposed to thinking natively about what the Bitcoin is. We're just trained and sort of programmed to think of the USD value, because the USD is the big gorilla. That's what we all care about. When people say, "Oh, you got $20 million," that means something. I think people just naturally don't think as easily in Bitcoin, but that changes over time. And overall, one of the reasons I'm bullish on Bitcoin is because I believe the current system is inherently unstable as a whole, and I think that it doesn't need to collapse in the near term. It can, as the old T.S. Eliot poem says, it can die not with a bang but with a whimper. I think over time, issues about debt and demographics and the stuff we were talking about the early part of this episode, those things will continue to weigh on sovereigns. They will force them to slowly and steadily continue to debase their currencies. And as Bitcoin matures alongside that and technological innovation matures as well, you're going to have an alternative that I think is primed to take that market share away from sovereign currencies. That's the thesis. But again, right now things are relatively stable. If you're in the emerging markets, as we said, you absolutely are craving dollars. You love the fact that you can get dollars and Bitcoin. With all due respect, like most people in really poor countries, they are hand to mouth. They don't have huge, massive savings accounts. You've got billions of people on this planet who have almost no savings. Okay, so that they literally get paid, and then the money comes in, goes out for their essentials. They're not storing their value. So for them to hold Bitcoin in large quantities seems kind of unrealistic at this point.
Guys, I want
Yeah,
to take the time
just I'll go first.
to just say that I hope these sort of spaces throughout the week, crypto spaces, NFT spaces, Bitcoin spaces, what have you. If you guys are new to spaces like these and this is your first time here, feel free to follow us here because Bitcoin. And at the current moment, we're just talking with Big Joe Carlos here. Joe Carlos here, correct me if I'm wrong, but you're about 6'4", 6'5", yeah?
Correct.
A monster, a beast, man. That's a But yeah, you'll find Big Joe here all the time, man, talking shop. I don't really get to host them
We're gonna play basketball in
on my
Miami,
segment.
right, Bobby?
I'll let you and Payne do that, bro. I'm just a regular
Yeah, I'm
Payne
6'4"
6'1",
too,
man.
Joe. I got you.
Yeah, yeah. I'm just
So I'm the smallest guy on the panel. All right, good to know.
but I believe in what I lack in height, I make up for in size at 330 pounds. So yeah, I see we do
Well,
have.
Bobby,
Go ahead, brother.
I just want to say this is so much fun. I gotta jump here for a second, but I really appreciate the opportunity to come up and everybody who tuned in and yeah, like always, stack those sats. And again, if you have a question or something I didn't get to, just feel free to reach out and DM me on Twitter. I'm happy to help. And if you have a litigated dispute, which is my day job, particularly litigated disputes in the crypto space, I specialize in those. So feel free to reach out, and I'd love to chat and help you if I can. And if I can't, I guarantee you I know someone in the space that can help you. So thanks
God
again,
bless
guys.
you, man. God bless you, your family, and your friends, and all that stuff. I look forward to meeting up with you soon in a couple of weeks, brother. It's gonna be awesome.
Absolutely. Take care,
Yeah,
Bobby.
thanks
Take
for
care,
coming up,
everybody.
Joe.
All
Appreciate
right,
it.
man. I see we have someone called Luke and someone called Rod. So the way I want to do this, I'm trying to make some new friends. So if Rod or Luke, if one of you guys want to be co-host, feel free to do so, Mr. Producer. You can send a co-host invite to either Luke or Rod, whichever one accepts first. I guess we'll be friends.
I appreciate the invite. I'm actually gonna be jumping off in a second. I was just listening. Joe, I guess had just had to go, and I was kind of listening to a few of the things being said because I'm someone who's pretty skeptical of them as much more than speculative tokens. So it was you know I tune into the because broadcast throughout the week and
Oh,
appreciate the
thank you, man,
programming and the
thank you.
discussion on markets. So but I thought it was interesting hearing his perspective, even if I may disagree with parts of it. So it was good.
Uh,
So I just wanted to chime in and say that.
Yeah, no problem, man.
I
How did you get into
appreciate the
how did you
compliments.
how did you get into Bitcoin and really investing as a whole? How did you
Oh no,
come
I'm
across
a
it?
I'm a skeptic.
Oh. And how did you get into investing in general then? Just broader markets, just in general.
um, I'm 34, and I did when I was maybe in my early teens. So my first investment was through a custodial account at Schwab when my dad managed it for me in like '03. So
Ah, do you like the tech
now
sector, industrials,
I had a
commodities?
long segue from being uh sorry, can you hear me?
Yeah, you're good.
Yeah, we can hear you. Go for it.
Yeah, we
Yeah,
can hear
yeah.
you, man.
I was
Yeah,
saying
I was just
I had a long
oh, go ahead, man. Go ahead.
yeah, like I had most of my life never working in financial services professionally. I worked at a bank, but in more operational role, and I went and got an MBA, but I worked in like corporate strategy. So I now work professionally at a family office as a byproduct of my whole experience doing crowdsourced research for GME back in 2020, and we published in Jan 21. So like it's been a cool experience. Just like I love how with Bitcoin and other cryptocurrencies, there's been like community aspects and research and just kind of sharing of information. So I can empathize and appreciate that sort of a venue and spaces set up.
What's your thesis? Like you seem to say like you don't you're skeptic of crypto. What's your fundamental disbelief in the space?
Well, I can understand the, say, for example, argument Joe was making that it's a sound of money that could serve as a currency if the tax rules were changed and yada yada. Like, I can appreciate that perspective because I do understand. I actually have some investments in, for example, Overstock has a venture fund called Medici Ventures, which has investments in blockchain technologies, Grain Chain, which has to do with agricultural kind of supply chain sourcing and proof. So like I see that there are technological like applications for an immutable blockchain. I just don't I think it's more of a risk token than anything, at least that as it's treated by market participants. So, it's like how do you value something that could potentially be a currency maybe? Like I see there's some optionality maybe to a bullish outcome like something like that longer term. I don't know. I hope that makes sense. Sorry, I'm not trying to be rude or anything.
I mean,
Yeah.
I think it
Uh,
kind of just depends. Oh, sorry. Go ahead, Luke.
Hold on,
yeah.
guys. Hold on.
Cheers.
Hold on.
Yeah. Yeah.
Hold on, guys. Hold on. Give me 1 second. Hold on. One thing I want to try to do with these spaces, whenever we have a panel, we got to do it one at a time, right? Those are just the rules. So we'll start off like this. Luke, I think this is the first time we run into each other. So my question, I got two questions for you. Okay. First question, how did you get into Bitcoin? Actually, no. First question, how are you doing today? Uh, what'd you have for breakfast? And my second question is, how did you come across Bitcoin and investing as a whole?
Hey, thanks for having me. Yeah, no, I'm good where I am. I'm just been sitting back here, just enjoying the space, and I had to chime in on a few things there because um, the reason I found Bitcoin was because I was looking for digital money that could not be stopped in the digital realm. And naturally that led me along a 3-year journey of discovering that all of the 22,000 cryptocurrencies in the space are actually not decentralized and they're not immutable blockchains. And that's kind of where I found Bitcoin initially in 2017. I was buying shitcoins and crypto and trading them like a degen, and then I kind of realized there's only one real innovation in the space, and that is creating a form of digital money that can't have its rules changed. And me personally, that's why I believe Bitcoin is the only investable asset in the entire space, because it's the only digital digital system that cannot be stopped or have its rules changed. And I think earlier in the conversation, somebody was trying to make the point that ETH maxis and Bitcoin maxis are only 1% apart. I was chomping at the bit to respond to that because I actually think ETH maxis and Bitcoin maxis are diametrically opposed. I see Ethereum as a reincarnation of the fiat system, just in the digital realm, where you have a bureaucratic set of rulers, Vitalik and his friends, who are able to change the rules whenever they want to change the rules. And I see that diametrically opposed to Bitcoin, where we actually have a form of money for the first time in history where there are no rulers and everybody has to follow the same rules. I know Dow Chemist probably wants to jump in, but just before he does, I'd just like to point him towards the 12-year chart, or sorry, 10-year chart of Ethereum's monetary policy. Vitalik has changed the monetary policy on 8 occasions, and he's done all sorts of things, such as the old DAO rollback, the kicking the proof of work miners off the chain. There are so many examples that show that Ethereum has had its rules changed on multiple occasions. Meanwhile, Bitcoin, TikTok, next block hasn't changed in 14 years. So, yeah,
All right, guys.
long-winded
So
answer, but
hold on. Give me all right but chemist, before you go on, uh, Mr. Producer, can you send Dow Chemist a co-host invite, please, to help out with connection issues? Just send Dow Chemist a co-host invite, and
Yeah,
also,
just received it. Thank you, Mr.
okay,
Producer.
no problem, man. Appreciate you, man. And for the individuals down here in the audience, if you'd like to come up and have a respectful discussion about Bitcoin and things of that nature, feel free to click request, And yeah, we'll bring you on up if you have any questions for the panel, or just want to give some statements, or just talk about your day and what you like to do. And yeah, feel free to do that, man. And Dow, the floor is all yours, brother.
Thanks, I appreciate that. I was actually going to respond to Rod first because I think he made some interesting point, but he left. So maybe just for the sake of the audience, I think his point was that he can't see how any of those tokens, including Bitcoin, can become currency, right? And I think right now, right, we have to admit that, even what Joe was saying, that is that it's hard for people to think of changing the unit of account, right? Like you live in America, you think in terms of dollar, and it's going to take time before that ever happens. But there's a potential that over a long enough period of time, there's enough adoption for one of those, let's say Bitcoin, for example, to become that currency that becomes unit of account, and people start to think, hey, I'm buying in terms of 0.0.1 BTC or things like that, right? So I think his point is granted, but maybe you can look in terms of Bitcoin today being digital gold, and then gold traditionally being used as a currency around the world, right, for all the values that we know. But real quick to your point, look, I don't fundamentally disagree because I understand where you're coming from, right? Like Bitcoin is immutable, right? It's just the way it is, right? And there's no changes. But where I would push back is on the characterization of those changes that you see on Ethereum, right? And I know that this is kind of like it's it's a shortcut to say with Vitalik, and you probably met Vitalik and Consensus and a bunch of developers are able to make those changes. But that shortcut makes a difference, right? Because you could actually, if you wanted to, participate in those calls, and you would hear those conversations. And what you would hear a lot of times is that the developers, yes, of course, Vitalik has political sway because he's one of the original founders, but you'll find out that most people don't necessarily wait for him to make decision. It's really a consensus among the developers. Now, to your point, there's a lot of users who are not developers and don't feel like they could participate in those conversations, right? There is this technical, you know, skill that you need to have in order for those conversations to make sense, right? And even most developers are not, technical enough to get into, changes at the blockchain level, which is a big difference from just, hey, writing a smart contract is super easy, but understanding how to change the consensus, the execution layer, the beacon chain, that requires architectural level that most developers and engineers don't have. So to your point, I get how it looks that way, how it looks like it's basically Vitalik and the E Foundation making those decisions. And you can point to the Dell hack. There's definitely a black eye on the Heath history, and Bitcoiners can bring that up for the next 20 years, and yeah, it'll still be a black eye, right? But I would invite anybody who's interested in that question, because I think it is an interesting question about whether that a process of making change on the chain is decentralized or not. If you just look, for example, at the ERC20, right? The creator had nothing to do with Vitalik or the E Foundation or Consensus or JP Morgan, any of those organizations. He's just a small developer who made a proposal for a change. And then the Vitalik, the E Foundation, and a bunch of other developers looked at it and said, hey, this is good, so we'll use that. The same thing happened for the ERC 721. It's a small developer who's not connected to, I would say, like the think tank. So where I would agree with you is that yes, there is definitely a think tank in ETH, right? There's definitely a bunch of people that can sway things a certain direction. But where I would disagree with you is that it doesn't mean that they control where the chain goes. It just means that they've set up an agenda and they say from the get go, from day one, we have this chain that is proof of work. They want to move to proof of stake, right? Since the day one of Ethereum, that was the plan. So they're going to go according to that roadmap, right? Then the decision as to when to introduce certain forks, what type of features to add, that's actually open conversation, open to the public, and open to the developer that knows enough to have a say in it. But to your point, yes, of course, it's gonna be politics, and the consensus guy have more say than maybe a random developer based out of India, and then Vitalik is definitely gonna have more say than another random developer. But you'll see that a lot of the proposals that Vitalik has are refused. A lot of his EIPs, not a lot, but like let's say 12 of them have been refused, and he didn't necessarily want the Shanghai fork to come before the scaling solutions, right? Like the PBS, right? A lot of engineers actually wanted those scaling solutions to happen before the Shanghai fork, but there was so much of a popular demand, and a lot of people were hating on the ETH and say, hey, you can't even withdraw your ETH stake, so that's a bad look. So it's actually the validators. It was actually the LSD teams that push for the Shanghai fork. So it wasn't necessarily Vitalik, the E Foundation, who had control into that fork that just happened this week.
Yeah, I mean, I would just when you say, it's open to everyone to kind of vote on it or have their input injected into the conversation when it comes to Ethereum changes. I would just point you towards some of the larger stakeholders in the Ethereum network in 2022, the Ethereum proof of work miners. I didn't think they were in favor of the transition to proof of stake. So, I mean, there's so many examples. Arguing over Ethereum in 2023 is kind of it's a mute point because it's the changes aren't done in a decentralized way. It is a proof of stake network, and it is a fact that 70% of all the Ethereum tokens were pre-mined to a very small handful of individuals when Ethereum was launched. So those individuals, like factually and objectively, have an outsized way over everyone else, making it not a decentralized process for changes being put in place. So yeah, there's no point doing the Ethereum debate because Ethereum's already proved itself to be digital fiat in my eyes, and it's just it's essentially a central bank digital currency in the digital realm that laughs about being decentralized when in fact it's definitely not decentralized, and it's definitely not for the people, as the people of Iran and Venezuela found out in 2021 and 2022 when they had their IPs blocked from MetaMask because there were sanctions placed on those countries. Like we could talk about examples of why Ethereum's not decentralized all day, but I think the ETH BTC debate's kind of over. ETH is digital fiat.
Yeah, I hear that. I mean, some of the points you make are valid, right? Like if you want to say that consensus has inordinate amount of influence in shaping the ecosystem of ETH, I can definitely hear that. If you want to say that JP Morgan or I think Goldman Sachs, one of the two, has a massive amount of ownership over consensus, right? Which is the builder of Infura and MetaMask. And that is a issue of centralization for sure, right? I don't think that if you talk to each person, they don't see those issues. They don't see that Infura is a problem, that most of the validators being on AWS is a problem, that 30% of transaction being OFAC compliant is not a good look, right? I think what they see is just a scale or gradient where you say, okay, well, is it decentralized enough to do what I want to do, right? Because what you said about the 70% pre-mine, right? Like I've heard that argument, like, and you there's probably something that you heard as well, like years ago, right? But if you go on either scan, you can't see that 70% concentration, right? So I hear those arguments, and I get where those are coming from. But I think if you the difference between me and you
Also,
is I think
I'll add to that real quick. The DAO hack was like a DAO got hacked. It wasn't Ethereum itself. So
Yeah, it's just the
yeah.
rule changes that were pushed through with the rollback on Ethereum.
but I think it depends on like your philosophy and your what you want out of the investment. Like, do you want to hold it as an like because it makes sense so much like you identify with it in such an ideological way that you'll never sell it and you think it is the premier asset, or do you want to hold this asset to make money, because I would argue that like people like who hold gold, for example, they hold that for a different reason than like people who hold equities. So I mean, I think they can coexist and they do completely different things, and like they also have an incentive to see it succeed. It's not like the decisions that are being made are necessarily like every decision they have made has only improved the protocol. So I think you know that's worth noting. It's not like these guys are just like fucking up Ethereum and making it unusable. It's more usable than ever now. And I think the fact that BTC can't do smart contracts, this is the best we have at the moment, and I don't know what
Lightning.
else. Like, what's up?
Well, guys, hold on, guys. I hate to cut it here, man. I really do. But I've been going basically 3 hours on Spaces today, and I gotta go eat and rest. I've got my event training tomorrow. I'm gonna do my yoke walks, my farmers carries, my Atlas stone holds. I'm gonna do my sandbag and keg medleys, my log presses, my barbell rows, my lat pull downs, and other things of that nature regarding strongman. So, with that being said, man, I hope everyone in here has a great meal, has a great training session in the weekend. I think if you're involved in financial markets, you should strive to also build your body. I think if you obsess over numbers so much and how much of an asset you hold, regardless of what it is, whether it's cash, whether it's stock, whether it's Bitcoin or crypto or NFTs, I think you'll drive yourself crazy. And there should be some sort of remote balance. I think everyone should have a hobby or a passion outside of financial assets. Because in the end, all these things provide is financial freedom, and that's what we're all about. At least myself, right? And also the individuals here on my panel. So I'm just gonna wrap up and say, hey, if you guys enjoy this conversation, I know, I know you're like Wabi, you're gonna say this again for the thousandth time, but I just like to say it, so it is what it is, right? So I'm gonna say it, right? The bingo card. If you guys enjoy this conversation, feel free to follow us here at Because Bitcoin. My name's Wabi. I host these spaces throughout the week here at Because Bitcoin. Sometimes I do them twice a day, right? So if I have like an AMA general discussion about a particular narrative in crypto, like I had today with Sri Ram, the founder of Eigenlayer, I'll usually host like a price action based crypto, overall crypto analysis space further on through the day. Usually at this time, 7 p.m. Eastern or 8 p.m. Eastern. So the shows that I host could really be abroad, right? Sometimes I'll host, these roundtable spaces, right? Like yesterday, we had the who's who of Elrond, right? NFT platforms, DeFi platforms, GameFi platforms, you name it. And we've hosted, a good plethora of products on Arbitrum. I've hosted GMX. I've hosted Gains Network, and the newer stuff like Granary. I've hosted CeeLo Finance, a whole plethora of stuff, and some new innovation things as well, like Say Network and Saga. So look forward to those. And yeah, thank you all so much. And we'll be back tomorrow at 4:15 p.m. Eastern time for our Bear Chain Spaces. And yeah, I do these spaces for the love of it, man. I love this industry, and if you guys know any protocol or any developer or individual like thought leader, feel free to reach out to me. I'm always looking to connect across the digital asset space, and yeah, feel free to follow all our speakers as well. And thank you to our panel. Thank you to our producer. Feel free to follow us one more time here because Bitcoin, and would appreciate that. We're trying to get across 8,000 followers. We're about 50 followers away from that, so would really mean the world to us. And also look forward to some things on our website. We're gonna have a huge overhaul and a revamp of our look and all that stuff. And yeah, over the coming week, you can expect guests like the OpenX Exchange. We're going to be hosting them next week, along with Ben Cowan and a few other surprises over the coming month. So that's what we're all about here, man. Hustling, making connections, and having fun, man. So hope you guys appreciated this conversation. You can catch a replay of this discussion up on our YouTube shortly after the space is concluded. So, that being said, take care. Have a good rest of your Friday or Saturday. Take care and God bless you. Be safe. Bye bye.